Markets have been quiet, perhaps overly so. But will this last? Will the US joining the Middle East conflict be a tipping point? Gillian Tett of the FT writes, "What we do not talk about is more important than what we do talk about," suggesting that investors aren't processing long tail risks and perhaps are too complacent. We've touched upon this subject before. An economy that is showing signs of slowing, geopolitical tensions that are getting further strained. And yet, risk assets are silent. In the week gone by, notably, the Fed lowered their growth expectations and upped unemployment forecasts, while also highlighting slightly higher inflation as a risk. More importantly, even as the median forecast still looks for 2 rate cuts by the end of this year, 7 out of 19 governors, and that's up from 4, voted for no rate cuts in 2025. Let's run through some key charts across different asset classes to understand where we really are in the markets. Look at equities. Nasdaq and S&P have a similar structure, both near all-time highs and both witnessing some momentum fade, as we can see here on fading volumes, but equally neither is signaling a specific sell signal, at least until the Friday gone by. The Nasdaq to S&P ratio will actually be more critical in setting direction. An upside breakout will likely see major equity indices resolving to the upside and clearly a bullish sign from there onwards. But is that a given? We don't think so. I mean, as you can see, this ratio is nudging towards its highs, but it really does need to break out for equities to resolve higher. As far as small caps are concerned, the momentum is clearly a lot weaker as compared to the large cap indices. Interestingly, we are seeing a similar sign of fatigue in international markets as well, be it Japan, as you can see here in a downtrend. You can see China, although it's in an uptrend, it seems to be losing momentum. And the same thing applies even to India. Now, moving the focus to commodities and specifically oil, with the US military actions against Iran over the weekend, the recent sharp rally that we've seen in Brent will probably gain momentum as markets reopen tomorrow. Treasury yields have been stuck in a range, and they're also likely to see an upward bias on inflationary fears. How long does this Treasury yield spike last will really depend on how long do geopolitical tensions last. A prolonged war will exacerbate oil price rise and hence inflationary fears with an upward pressure on yields. Longer term, however, we remain of the view that a growth slowdown will drag down yields, favoring duration. In fact, the spread between high yield and investment grade corporate bonds is back to near record lows. And these are probably, as in corporate bonds, are probably more at risk when compared to treasuries. So what does that do to volatility, the dollar, and haven assets? VIX, after a sharp reversal from peak in early April, is starting to rise again. And with conflicts worsening, the likely path for volatility is going to be higher. As far as the dollar is concerned, and aside from the fact that it is severely oversold, as we can see here on the RSI, and it is showing some signs of revival in short-term charts, the broad trend for DXY is down. But remember, in times of crisis, traditionally, the dollar has been a beneficiary as a haven asset. Talking of haven assets, gold, which has been stuck in this range for about 6 weeks or so, and as it often does, is likely to see an upside breakout. And logically, therefore, so should Bitcoin. Whether that happens or not, we shall see. And so where does that leave us? Markets have been in a range-bound phase, and this is across equities, fixed income, currencies, and even commodities. In our base case, we see struggles for equities, favor longer duration treasuries over corporate bonds, and we've highlighted some of these risks, and we favor gold. Oil will be opportunistic, as will be the ability to use derivatives to extract premiums as volatility rises. Directional resolution needs a catalyst. Has Mr. Trump reversing his Middle East stance just provided a bearish catalyst. Have a great week ahead. This is Sunil Garg from Lighthouse Canton.